So this is not a surprise. This is resolution and toward the path we were expecting anyway.
So for viewers who aren't familiar, Tryon is an activist investor who's been involved in GE. You tell me it's not anticipated, but the stock is higher by more than 5%. Why is the stock reacting so positively?
Well, two things. First, when you have a stock that's been depressed enough, there's a little bit of relief. And then second of all, while I think this is anticipated, it's never done until it's done. So this won't be a shock. Obviously, an up 5% move is nice, but in the big scheme of things, we're talking, 50, 60 cents. Definitely way below my upgrade last November at 23. So I'm still have to be patient.
Brian, is there any chance that we'll look back and say, GE was forced to part with one of its better assets in healthcare, that basically a long-term growth story, that they're sort of untethering it right now because they feel like they have to simplify the company?
That's a great question. So a couple things. First of all, if you're a current GE shareholder, when spun off, there's no change. We just took a slice of the pizza out, but you still own that slice. So it doesn't hurt you at all. Second of all, there's a misconception about their healthcare business being a high-growth business. If you really look at their core growth over the years, it's been a GDP-like grower. There's nothing wrong with GDP-like growth with, healthy margins and returns on capital. But it's not this fast growth business. It's a steady growth business. But as a shareholder, you still own it. There's no change unless you choose to sell your shares after it's spun out.
What about the dividend? When you read what they're putting out, and we're going to get more on the call later on this morning, there's going to be a decision on the GE healthcare dividend once that company is formed, and then another discussion about what's going to be the dividend on the remaining part of the company. What's your assessment for viewers who a long time ago got into the stock because they thought it was a solid dividend? Where do you think this thing is going?
Well, let's think about the overall dividend. When you take that piece of GE Healthcare out, there's a proportion of the cash flows that were going into the dividend from healthcare. You should have that piece. The question becomes, okay, well, you also have the oil and gas business. They're going to unload that, and that would have been supporting a little bit of the dividend, but not a lot because the profitability had been depressed. Now, I would say, okay, well, why are they looking to sell rather than spend? And the answer would be, that oil price is up. They think they can capture more money. I wouldn't be surprised if the dividend on the remaining GE gets cut, not only for healthcare, but also for the sale of Baker Hughes. There's no reason not to take it lower.
Brian, I was going to say, just to follow up on that, because GE has said that after the healthcare spin, they'll bring the dividend back into line with its industrial peers. Do you think that means in terms of yield? Now, the other industrials yield between 2 and 2.5% or so. GE's at 3.8, or in terms of how much of earnings they pay out in dividends?
There's what it should. The first answer is I'm not sure how to read that statement.
Yeah.
Okay. I mean, let's just start with that. If I'm John Flannery and if I'm going to take the dividend down, I would take it down in terms of yield. What it should mean is relative to some kind of percentage or long-term payout ratio on the earnings of Power and the rest of the businesses. However, since Power is performing so poorly and earnings are depressed, but that's a fair question and it bears clarification.
Yeah.
Brian, help us end. I don't know if we're going to end the debate. It may be a debate that goes on for a very, very, very long time. Will history look kindly upon Jeffrey Immelt?
Hell no. No.
That was a soft question, right? You're asking something. What we've been discussing, Brian, throughout the show has been much tougher. Is how much did Jeff know and when did he know it?
Interestingly, of all things, I was having dinner with a former GE executive last night, and it's a lot easier to get answers when someone's not there for a long time. And I think there's a pretty good body of knowledge that it's not that Jeff wouldn't have known something, but if the emperor doesn't want to hear bad news and the emperor wants to look at things a certain way, he or she is going to do it. And that's what has happened.
But is that a good faith professional optimist, or is that a bad faith, let's hide the bad news?
More of an observation of the human condition. I'm not judging him as a person, okay? That's, first of all, I'm not his judge. What I'm saying is, no, I would expect that he thought what he thought. And people can, frankly, talk themselves into a lot, and I think that's what happened here.
Okay.
At some point, did he realize things were going wrong? Yes. I would think in the last couple of years, you would think. But by and large, no, I just think it was bad decision-making and consistent bad decision-making that has gotten us here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.